The next company on our radar is Chambal Fertilizer. The company reported a mixed set of numbers in the fourth quarter. EBITDA and net profits expanded, but revenues declined by 26% on a year-on-year basis. The management have said that they've a strong pipeline of 12 new products in FY25. So let's get some sense of what FY25 will look like. We've got Mr. Abhay Baijal, Managing Director at the company, joining us now. Mr. Baijal, good morning. Good to have you with us here. Thank you very much for your time. Prashant this side. If I can start by asking you, you saw lower urea volumes in the fourth quarter, and there were some planned maintenance shutdowns, which I think took a bite out of what you could have otherwise done. Could you tell us what kind of volume growth on the urea side can we expect in FY25? And will you more than make up for what you lost during Q4?
So, Prashant, you're right that we had two major shutdowns to do a plant maintenance. That was for our plants, number one and number two. These volumes will be made up subsequently in the next year, obviously, once the plants start running. And the growth will be, we are running these plants more or less flat out. So unless we do some more capacity additions or debottlenecking, we will not be able to produce very much more. But what we are looking at is margin expansion through energy efficiency projects that we have already completed. So that will be the key driver for growth in terms of EBITDA next year.
What kind of numbers should we expect, sir? I mean, if you want to guide them.
I would like to name a number because the business depends on three factors, which is the gas price, the dollar, and the number. And these kind of numbers we can't really predict going forward. And these plants, of course, what we have planned to do, we have done better than that, what the initial results show us. So we would be, we have spent almost 185 crores on this energy efficiency projects. And we expect good returns out of that. You can take it that normally we do projects between 4 to 5 years payback. We can make your guess.
So I'll come back to your overall business, but I just want to talk a little bit about the balance sheet, Mr. Baijal, because you are sitting on a debt of almost 1,400 crores now. With the TAN project going ahead, can we assume that your debt will go up further? If yes, what is the maximum debt level that you're comfortable with, say, by the end of FY25?
Like Sonal, I think this company is known for very strong cash flows. And going forward, we are actually also sitting on quite a bit of cash as of 31st March. Quite a bit of that will be settled against the loans. We expect to be a very, very low debt company towards the end of 2025. And
when you say low debt, can you just quantify it for us?
I would say that it will be close to zero. And the second part is that in terms of TAN, I don't think we have planned any borrowings for TAN.
No, close to zero. I mean, you're sitting on debt of 1,400 crores, right? So you're saying by the end of FY25,
we have cash also.
Retire?
We have cash. We have cash on the books.
Yeah. Okay. Right. So by the end of FY25, you're saying you'll be close to zero debt. Okay, got it.
Mr.
And this
yeah. Okay, go ahead. No, so Mr. Baijal, the number I think that we have is you're already a net cash company, and you're saying that even though you have this TAN project, you'll continue to remain net cash. Did we get that correct? Because as of now, you're around 200 crores net cash.
Yes.
Right. Okay, got that out of the way. Now, what about the subsidy? You received around, I think, 15,000 odd crores in the past year. That was a little bit lower due to lower gas prices. Is there any subsidy that's outstanding?
No, in fact, we are quite happy with the situation of the subsidy right now. And I think with the government making adequate allocations, we don't see any problem on that side going forward.
Okay.
Sorry, you're saying, Mr. Baijal, you're saying there's no problem in receiving subsidies, etc.
Yes. I mean, there's no shortfall on the government side allocations.
Of course. There has been a revision in gas costs recently. Could you tell us, what do you expect? You said that's one of the three variables which impacts the business quite a bit. In your opinion, I mean, how's that going to largely going to pan out? In 25.
As per the policy, there are two parts to the compensation that we get. One is up to a certain assessed capacity, and then thereafter. The part which is thereafter is the one that is impacted by gas prices as well as the international import prices. So that's the part with lowering gas prices, you get a better margin there. On the other side, at the same time, because of energy efficiency projects, whatever costs you can control, your energy efficiency paybacks get better if gas prices go up. So it's a kind of a mixed bag, and you have to see where the optimum operating conditions lie.
You know, if international gas prices, as many are forecasting, come under, fall quite a bit because of this anticipated gas glut. What is the sensitivity to your earnings based on that second part? I mean, if gas prices come off quite a bit, could you give us a sense?
I would say that in terms of dollars per ton, we would be varying by between $2 to $3 per ton on every plus and minus that happens, because on the beyond 100% production we will gain. On the other side, on the efficiency cost improvement, we don't get that much payback. So it is netted off. If you net it off, that is almost $3 to $4 a ton.
$3 to $4 a
ton. A ton.
A ton of produce.
So of the product.
Product. Okay, got that. I mean, that's quite a bit, right? I mean, that's
yeah.
Okay,
yeah.
Got that. Thank you very much. Let's hope gas costs come off, not just for you, but I guess it'll be good for. Sorry.
If it goes down too much, then also there's a problem. It goes up too much, also beyond 4, there's a problem. So there's a netting off.
Yeah.
And it can be plus and minus both ways. Yeah.
No, got that. But I think as an importer, it'll be net positive for the country. Thank you very much, sir. Appreciate you joining in and running us through all of that detail.